Hey everyone, this is Steven and welcome to another business English tutorial. In this video, I'm going to talk about money. So what is money and how does it relate to investing? Well, I'm going to answer those questions and also give some examples to help us better understand this subject. So I want to give a three-part definition of money, and money is all three of these things at the same time. So the first being a means of exchange, the second a store of value, and the third a unit of measurement. Now most economists might say a unit of accounting. So if you work as an accountant, you know that your job is to keep track of the money that flows within a company. For the purposes of this video, I want to use the definition a unit of measurement. Let's go ahead and talk about the first definition. A means of exchange. Money is something that people want, not for its own sake, but because of its function, because of what you can do with it. You can exchange it for the things that you need or the things that you want. So in one example I want to give, let's say you work for a business and that business makes things and sells them to the public. Now in exchange for the work that you do, you are rewarded with a monthly salary. And then once you get paid with dollars, you go ahead and use that to exchange it for the things that you need or the things that you want. I like to drink oolong tea, large, easy ice, sugar-free. And if I want to satisfy that want, I'm going to use money to exchange it for that. Because money is not something that I can eat, I can't wear it, I can't wash my hands with it. So I need to exchange it for the things that I need or want. So looking at this from a sociological perspective, money really allows cooperation within a society of people, and we're all better off because of it. The second definition of money is a store of value. Now when I say store, I don't mean an actual store like Costco or Walmart, but really it's a storage of value. So money has the ability to keep its value over time. Now I'm not going to talk about inflation, money supply, or interest rates. All three of those forces can have an influence on the value of money. But all things being equal, and if everything stays the same, money can keep its value over time. So $100 today is going to be $100 tomorrow, next week, next month, next year, 10, 20 years from now. So it's not going to lose value. This is in direct opposition to the things that we buy. For example, food or smartphones. We know intuitively that on the day that we buy those things, it's not going to have the same value a couple days later because food spoils over time. And cell phones also break or they get old after we use them. Money, in a sense, keeps its value, as opposed to the things that lose value over time that we buy. And the third definition of money is a unit of measurement. Now this is what I like to call keeping score. Businesses, they need money in order to determine how they're doing, how healthy they are, and whether or not the business is going well or not going well. And we apply this rule in a lot of other situations. For example, sports. When sports teams play against each other, they use a point system in order to measure the performance of the players and of the team. So if the Lakers are playing the Knicks and the Lakers win 98-95, then we know that the Lakers performed better in that game as opposed to the Knicks. If we're taking a test or doing a homework assignment and we get an 86 out of 100, that is one way that we measure our performance, our ability to take that test or do that homework assignment. Now the same thing can be said for businesses and for companies. So here I have a very, very simple basic income statement. Now let's say both companies sell the same product, mousetraps, and company A does about $1,000 yearly in annual revenue and company B makes twice that much. So all costs being the same, company B retains more in profit. They're able to sell more. So we can reasonably conclude that company B measures a little bit better in this respect. This is one way to determine whether or not a company is better than another. Now, this is just one way, it's not the only way. There are other ways in which we determine how valuable a company is when it comes to investing, but companies need money in order to be able to track their progress, and if they don't, then it's going to be very difficult for them to really know how they're doing. Now, what does this all have to do with investing? So that's the $64,000 question. In essence, your view of money is really going to determine your approach to investing, how you invest, and what you invest in. Your goal as an investor is to make money. And if you want to make money, you're going to invest in companies that also make money. You're not going to put your money into a business that you think is going to lose money or that's going to be a flop. So going back to our first and third definition of money, a means of exchange and a unit of measurement. So money is transaction. It passes from hand to hand. So if you pass it to a company, you want to be sure that that company is going to use the money responsibly. They're going to be able to use that money to produce good products, which they can then sell to the public. And if enough people buy it, then that company will be profitable and they will return that money to you in the form of a dividend. And companies use money in order to measure their progress. Like I said, money is a unit of measurement, and you can easily check this in the income statement of any company that you're interested in. Money goes round and round. Now, generally, I like to recommend investing in companies, so buying stocks of those companies or mutual funds and ETFs, partially because my personal view of money is that it's a means of exchange and it is a unit of measurement. So let's go ahead and recap. So money is a means of exchange, a store of value, and a unit of measurement. All three of these things at the same time. So that's it for today. I hope you learned a lot in this video, and if you did, go ahead and please give me a thumbs up, and I'll see you next time. Thanks for watching.